Hey, over here. This is $1. And in my most recent video, I talk about how I saved $250,000 of these without using any side hustles in just 2 years. Anyway, wait. Yeah, I kind of needed that dollar. Anyway, go watch that video. It's got good advice, I think. Today in this video, we're going to crack into that new $250,000 portfolio, and I'm going to specifically talk about why I'm selling one of my favorite stocks at a 60% gain. The stock is Murphy's, ticker symbol MUSA, a gas station that sells affordable gas to attract customers inside where they make their profits from in-store sales. Oh, and one more thing. Watch until the end, and as a bonus, I'm going to tell you what's even more impactful for your wealth than making 60% on a stock. Yeah, hold on a minute. I'm about to get some gas. Welcome to Murphy's. Do you need help with anything? Can I get some Skittles, a water, and could you put 20 on pump? Bro, does that sign say 250,000 per gallon? What? The gas! Is it really 250K per gallon? I was here last week! I'm sorry, I wasn't really paying attention, so I don't know. Alright, whatever. Just give me these 2 Red Bulls. Okay, your total is $250,000. Cash or card? Whoa, calm down. I just clocked in 10 minutes ago. My manager just told me about the buy 3, get 2 deal on the Red Bulls, okay? How about we just do that? Alright, fine. How much? Yeah, it's a pretty good deal. Your total is 300,000. Okay, so the real reason why I sold Murphy stock is because the thesis changed for me. You see, Murphy's is a share buyback machine. And in order for this to be beneficial for me as a shareholder, I need the multiples of the company to remain favorable. I acquired my shares when Murphy's was still trading at single-digit multiples. Now, the EPS, the earnings per share, is being propped up not by the growth of the company, but rather by the share buybacks. And I'm okay with that, except it went from single-digit multiples to around mid-teens multiples. So essentially, the stock was getting more expensive, and therefore share buybacks become less beneficial for me as a shareholder. Honestly, Murphy's is a company that's very well run, and current shareholders are likely to continue performing well. But for my own personal portfolio management, I saw a opportunity to exit my shares because they became long-term capital gains.
Bro, what are like long-term capital gains? Is that like gains but waiting a long time? Cause I've been skipping leg day and I think people are starting to notice.
Crypto shark, you're kinda dumb. Long-term capital gains are taxed more favorably after you sell a stock you held for over 1 year. Here's a table to show where your tax rates are at. Most people are at 15%, but I bet Crypto Shark is at 0%.
So essentially, I sold Murphy's because the timing was right. And I saw another company which was trading at single-digit multiples, which I believe to be undervalued, is also a buyback machine and a little bit more risk to that company. But nonetheless, I wanted to take that risk. Overall, perhaps the move I made was wrong. And that's the nuance and the difficulty of portfolio management. Because if I were to hold Murphy's, I would avoid incurring a taxable event. A little off topic, but speaking about share buybacks, if you want me to talk more about returns of capital via dividends, share buybacks, and all the nuances of that, essentially kind of like thinking like a CFO, go ahead and leave it in the comment section below and I can make a video if there's enough interest in that. But yeah, that's pretty much it. I hope you enjoyed the video.
Dennis, did you forget what you said a few minutes ago?
Watch until the end, and as a bonus, I'm going to tell you what's even more impactful for your wealth than making 60% on a stock. Silly me, how could I forget? Thanks, Kato. So just like the last video, I want to share a message to the good people of YouTube. You and I, we are normal average people. So I want to give advice that's applicable to my audience. Just like you saw in my previous video where I advocated against focusing so much on side hustles and focusing more on your main career, I want to echo a similar message in this video. In my 2-year portfolio challenge, I got the portfolio from $0 to $250,000. That is a respectable amount of money, and within that, one of my significant holdings, Murphy stock, went up 60%. Honestly, that's not that much money. A 60% gain in that stock only amounts to several $1,000s. That's not really life-changing money, and especially for the amount of energy and time I put into researching into the emotional aspect of holding a stock, as well as the risk that I took. Imagine if the stock went down. All of those things that I did just to eke out several thousands of dollars, it's not that much. Honestly, you can make more money just focusing on your main career, working some overtime. That would make you more money than all the amount of effort you put into trying to pick individual stocks just to eke out a little bit more percent of gains. That's not even assuming that you pick a stock and it goes down. We're only assuming that you pick a stock and it goes up. So my message to the good people of YouTube is this. Specifically, is to focus on your savings rates and your earnings rate. If you can focus on saving more money instead of doing frivolous purchases, and if you can focus on earning more, whether that's through, maybe it is time for you to do a side hustle, or maybe it's time for you to focus on your main career more. Whatever the case is, focus on those two things and invest in broadly diversified ETFs. You will find your way into millionaire status.
Thanks for watching. Click here to see the $250,000 portfolio challenge. I wonder when the cat will make her way into a video. Dennis should really get a haircut.